What every Calgary homeowner must know before renewing or before renewing your mortgage. And today we are diving into one of the most important topics for homeowners right now, home equity. Not just what it is, but how it works in today's market, how you can safely access it, and how your financial health, debt management, and upcoming renewal are all connected. Because for many Calgary homeowners, your home equity might be the one tool that protects you from payment shock, credit stress, and long-term financial setbacks this year and next year, that is 2026. This video could save you thousands of dollars and months of unnecessary stress. All right, so let's take it this way. What is home equity? Let's start with the basics, but I'll keep it simple. Home equity is the difference between what your home is worth and what you still owe on it. That is home value minus mortgage balance equals your home equity. Mathematically, if your home value is 500,000 and the mortgage or the total debt on this is 300,000, that means you have 200,000 in equity. But here is the part most homeowners don't realize. There's a difference between equity on paper and equity you can actually assess. In Canada, most lenders allow you to borrow up to 80% of your home's current appraised value, not the value you think, not the value from last year, not the value from your neighbor's sale, today's value, not the value from city assessment. And with certain Calgary segments softening, this matters more than ever. Why home equity matters in Calgary right now? Why? Calgary has had a strong run these last few years. Record migration, low inventory, high demand, and benchmark prices climbing. So we've seen quite a build up of equity for people who have bought some time ago. But in the late 2024 and into 2025, even now, we've seen a shift. Some segments, townhouses and certain condo pockets and detached homes under 600,000, these have started showing signs of price stabilization or slight price softening. The market data shows that condos are kind of dropping by 5% thereabout in certain areas. So why does that matter? Because your equity access depends on your appraisal or how much your home appraises for. So if home values cool, your equity access can shrink, even if your mortgage balance hasn't changed. This is why homeowners are asking Conrad, should I access my equity right now or should I wait? Let's discuss the financial health connection. That's the part nobody talks about, but every homeowner feels it. And let's get real. Many homeowners in Calgary and across Canada right now are carrying more debt than they were 2 or 3 years ago. I mean, as you're watching me, if you have a house, if you have a home, I can probably confirm that you have some debt you are battling with, probably that you did not have a year or two ago. So between higher cost of living, rising interest on credit cards, and delays in income adjustment, inflation, household debt has become a pressure point. Credit cards are at 19 to 29%. Car loans at 7% to 12%, personal loans at double digit interest. So that's why home equity becomes a lifeline, not a luxury, but a lifeline. That's what can take you out of those high interest debt situations. Because using equity at 5 to 6% to eliminate debt at 19 to 29% is not only smart, it's financial survival. It's an excellent financial strategy. And if you are renewing from a COVID era mortgage at 1 to 2% or between 1 to 3%, you are about to feel the biggest payment jump of your life. And a lot of people are scared, and we'll be getting calls on what people are expecting or afraid of. So equity might be the tool that softens that jump and protects your financial health. The question is, when should you assess your equity? And here is the part where timing really matters. There are good times to assess equity and bad times to assess equity. Let's start with the best times. The best times to assess equity. Number one is when your mortgage renewal is coming within 6 to 12 months. So for those people who got their mortgage during the COVID era and renewal is in 2026, probably within the next few months into 2026, this is the time. And why? Because you are still qualifying under your old lender structure before renewal timelines tighten. There are a lot of options. You are able to have a clearer picture. You are able to plan your finances. You are able to anticipate. You are able to put things in place. And number two is before any planned income change. New job. Probably you're going to switch a job or your job is changing. It's good. Take care of your equity before then. You're going on maternity leave, a business slowed down, retirement is coming, or anything that affects income that is on the way. So anything that affects income can reduce your approval options. And that is where it is very important. And then number three is before home values soften further. And that I normally tell people, like right now, what we are seeing now. Appraisers look backward, and if similar homes are selling for less, your equity may shrink. So if there is a forecast or things are showing that your home value might go down by 3 to 5% within the next 12 months, you want to take your equity before that happens. Number four, before consumer debt becomes unmanageable, waiting until the last minute makes approvals harder, interest costs much higher. So you want to take your equity before such things happen. So when not to assess equity. Now we are at don't do this section. Don't do this section. You have the equity, but you cannot assess it or never try to assess it. So never try to assess the equity one right after missing payment, right after missing your mortgage payment, during job probation, right after switching to self-employment, when your credit score has taken a recent hit, during market segments where appraisals are coming in lower than expected, where because lenders will see it and it will reduce your options. You are not in a good state. You are not in a good book. You are not in the good books of the banks. So lenders will see it and it's not favorable. It doesn't mean you shouldn't at all, but those are not a convenient or appropriate time to assess your equity. How Canadian lenders decide if you are approved? So let's take a look at how you are assessed. How do they assess you to confirm that you are approved for equity takeout? Let's break this down clearly and accurately. Canadian lenders check 5 main things. For you to be able to assess your equity, you have to qualify. To qualify for it, there are things that lenders are looking for. First, they will look at loan to value, called LTV. You must stay under 80% after borrowing, unless you are using a reverse mortgage or private financing option. Your credit score also matters. If you have a credit score of 680 and above, that might get you the best rates. Majority of lenders, most of them will operate with a rate above 680. 640 to 679 workable, 550 to 600 you can work with alternative lenders. Below that, they will look at it case by case. Those are in the private section or private lender territory. You want to look at your income stability. If you are full-time, You have options. If you are self-employed, they normally will want to use 2-year average income. They want to be sure you're not owing CRA. They look at your debt ratios, typical limits, especially for the A side or regular banks. They will look at maybe your GDS is 39, your TDS is no more than 44. Some lenders allow exceptions, but you want to be sure that you are on top. These areas of qualification, you are doing good. They look at the property condition as well. So in Calgary, issues like poly plumbing, active ventilation problems, special assessments in certain condos, structural concerns, all of this can reduce approval amount. So yes, if your property has an issue, the banks want to be sure that they are not um, covering those issues. So this is real and it's happening today. Let's take a look at 3 ways that Calgary homeowners can access the equity in their homes or even anywhere in Canada, because the rules are Canada-wide. So HELOC, that is home equity line of credit. That is one. It is very flexible, usually interest only, provides great, and it's great for cash flow and investment. And probably I believe, is the most option that most people use, the most popular or most used option. Then refinance. In refinance, you take a lump sum. You can reset the amortization of the mortgage, and it's best for debt consolidation and also good for lowering monthly payments. You consolidate everything. You have one mortgage, and everything is better. The third option is second mortgage option. It's usually short term, could be 1 year, could be 2 years. The approval for this one very fast. Useful when credit or ratios needs to be repaired before refinancing into a better lender later. So when you are getting this second mortgage, you want to be cautious. It's not something you're going to have for a long time. You're going to refinance down the road. So take note. This is exactly what we did for homeowners in recent time, and most of them are very happy. So they consolidated their debt. That led to improvement in the ratio. They have to refinance down the road, and it saves them a lot in their monthly payment. So let's look at Calgary renewals, the hard truth about Calgary renewal, because we are looking at a Calgary real estate market right now. So if you bought your home in 2020, 2021, or 2022, and your mortgage was at 1 to 2%, your renewal today is likely to be around 4 to 5%. And for many Calgary families, that's about $400 to $1,000 increase in payment. That's likely what is going to happen once your mortgage renews in the next few months, the next 12 months, I believe the next 12 to 24 months. So equity is very essential if you can access. So equity can reduce your renewal payment pressure. It can help clean up expensive debt. It can help extend amortization. It can help improve your credit profile. It can help increase lender options, and it can help reduce stress test impact. So if you have enough equity in the property, this is the time to think about what to do with it. And for many homeowners, equity planning before renewal is the difference between surviving the change and struggling through it. I know people know about the word equity, but how to approach it, the understanding of it, and how they can use it is the problem. When equity is a wealth tool, it is not a rescue tool. Not all equity access is about emergencies. Some Calgary homeowners use equity to do other things, and which is very good and which we normally applaud. They add legal suits that helps with extra income. They help use it to improve property value. They use it to buy investment properties, use it to build long-term cash flow. They use it to support education, and they use it to boost emergency savings. Some use it to will to their kids. Some use it to support their kids' education. So very important. Smart equity use is how many families build multi-property portfolios and long-term financial safety. It's been a source of funds for people who want to expand their real estate portfolio. So home equity is very important if you can use it wisely. If you are a Calgary homeowner and your mortgage renews this year or the coming year, or you are carrying more debt than you like, or you want to understand your equity options, this is the right time to take action. Not waiting till renewal, but before renewal. If you want a personalized, no pressure home equity plan, send me a message with the word equity. You can send me an email, you can send me a text, or renewal plan, and I'll walk you through various options clearly based on Canadian rules and Calgary's current market realities, and take you through options that work for you. Or if you just have any question on mortgage, any question about real estate, the Canadian real estate, Calgary real estate, you want to also probably assess if you really have an equity. We have a way of determining quickly how much equity you have before even the bank sends the appraisal. So I'm here to help you protect your home, your financial health, and your long-term stability. The name is Conrad. I'm a mortgage and a real estate professional here in Calgary, guiding and educating people on how best to make it in real estate. Until next time, the name is Conrad. Thanks for watching. I will see you in the next video.